one more guest from the other big conference that's currently underway. Manish Prasad, the Managing Director and Head of Institutional Equities Division at JM Financial, joins us now. Good morning, Manish. Thank you very much for joining us from your conference on what should be a very busy day for you. Well, first up, what's the impression you're getting from the guests at the conference itself? Are you getting a sense that the FII flows return anytime soon, or are we going to see a long period of FII outflows in India?
So let me answer the second question first. I don't think there's a question of outflows really, but I think we can't have year-on-year returns that are giving you 15-20% returns on stock markets really. The underlying economy needs to be in sync with markets. There are a whole host of factors globally. There's possibly a dollar hegemony that is in play really. And therefore, currency, other asset classes, if you look at fixed income, possibly interest rates globally, look at gold, all that has a bearing really. So I think we are in a period, so to say, of fair consolidation. I don't think there are returns which should be expected. I think we're having earnings cut quarter on quarter for the past 8 quarters, and we still don't see clarity in terms of when we'll hit the trough and earnings will start increasing by and large. I think results again this quarter were pretty disappointing. So I think it's time for, continued tightening belt, productivity gains rather than really top line, and therefore float all the way into the bottom line for earnings expansions to happen and consequently markets.
Hi Manish, good morning. That's really been the big disappointment, the earnings performance. It's been 1.5 years since the new government has taken over. They've made the right noises, but we haven't seen an improvement or a pickup in corporate earnings, and you just told us it's been 8 quarters of a cut, 8 quarters of cuts to consensus expectations. Can the markets perform or do well at a time when earnings are weak? And give us a sense, when do you expect the earnings recovery to take place? Expectations for F516 as well as F517 now.
So I think difficult to call when the turnaround is, and it's nothing new. I mean, if you go back to 1996, similar cycle, asset prices, possible bubbles in pockets. You had unbridled capacity expansions then, similarly over here. Unbridled leverage on balance sheet, same thing over there, same thing now. Inflation seeping into society, pulling back consumption, of course. So we're going exactly in the same direction. Only one big difference is the global backdrop is not as conducive as it was in the 90s or in the late 90s. But as we went through the period of belt tightening at that time, I think we're going similarly in that sense. You spoke about even government being here for about 18 months, and we've seen a lot of noises, but nothing really has come about. I think it's not government's job to really see how businesses really get ahead. It's private enterprise that needs to do it. Government's job is to create the environment, and I think they've done far more than what really is necessary. If you look from the clearance of the coal spectrum, possibly jet-setting PM going and creating bilateral relationships globally, asking in for global companies to come and technology as well as engineering companies to come and set up bases over here to create employment. And what is he saying? Come over here, set up things over here, we'll give you a great environment to operate in, create employment, and you can actually partake in the consumption boom that will ensue because of really the employment that will get created out of it. So it's the private enterprise that needs to get back, but I think we need to wait through a bit of not crisis, but I think in terms of the slowdown that we have gone through, and the global backdrop also has to improve. So that's where we are really. I think we possibly are 2/3 of our way down, if I just compare it to the previous cycle. Give it a couple of quarters, hopefully things should start picking up. But putting a pinpointing a time to it is a difficult process in my opinion.
1/3 of downturn still left in terms of time or stock prices, Manish?
Well, I think stock prices is a function of various things. I think one is the local fundamentals, the economy, the earnings, the PE rating, and I think cost of money, capital risk premiums that are at play, interest rates globally. I think it kind of is a function of that. I think in terms of time, I would think it's about a couple of quarters away in terms of price, if you're asking me from a stock market perspective, because the economy should start picking up in a 2 to 3 quarters, there should be a bit of a early move on the markets. But you can have corrections because of volatile interest rates, money flows, currencies, and it can be pretty swift. But at this point in time, what we are recommending, what we think, what our research think is, keep your guns loaded where you'll have great opportunity to buy India, because the environment is being set up pretty well by the government. It's only that you need to see great prices to buy, and obviously the economy will turn around. So right now your mindset should be to look for opportunities when you can enter at great prices, rather than just kind of, wait along and think that we want to just,
Okay, so Manish, just a word on your guest list. The guest list has actually got a fair amount of what you can call urban consumption, perhaps. There is Varun Berry from Britannia who will speak with you. There's Bhaskar Bhatt of Titan. Then you've got Sivakumar of ITC. Okay, that would perhaps be a all kind of consumption story. There's Mr. Adi Godrej speaking to you. Abhishek Lodha. Is your bet on urban consumption at all?
Our bet is on urban consumption. Just to give you a perspective, about 6-8 months ago, we did a rural safari kind of a thing, covered about 40% of India to understand how rural consumption is holding up. It actually wasn't. We came back with adequate data to show that MSPs, property prices, gold, general momentum of economic activity is slowing down and definitely having a repercussion on rural consumption. We finished a second round right now. We now covered 70% of India, and I think it's pretty evident that rural consumption has fallen off quite dramatically. I think seasonality has played into it. I think MSPs or food prices, so to say, at the farm level haven't really augmented any growth. Similarly, I think government projects, asset prices, I don't think there's a farmer selling current land and going 10 miles away buying another piece of land and again selling it down. So I think that activity has kind of stopped. So yes, our focus more so, and in our whole portfolio approach, is more urban than rural, clearly. There are some great ideas over there on the rural side. There would be great opportunities to buy at a value, but because I think it's going to be a bit prolonged for the rural participation to really come back into the economy.
Okay, Manish, stay on. We need to slip into a very short break, but got a lot more questions with you. For now, the markets have settled with a cut of nearly 0.5% in morning trade, weighed down by IT, oil and gas names like ONGC on the back of the decline in crude prices, and Coal India, where the realizations missed expectations. We'll slip into a very short break, continue our conversation with Manish, and also SH Kelkar and Company makes its debut in the exchanges today, so we'll track the listing and speak with Kedar Wazir, the group CEO.
Welcome back. We've been speaking with Manish of JM Financial on the conference, but just a word on the markets. Down about 0.5% at this juncture, 7722 at the lowest point of the day. That's SH Kelkar, the fragrances company, which lists today, and looks like it'll be a big bang listing because it got hugely oversubscribed. It was what, a 26-time oversubscription from the institutional guys. So that 21% premium listing was always on the cards because it did so well in the IPO rounds. This would amount to actually 48 times or almost 49 times historical PE that the stock is trading at. It's a big company, 2,600 crore plus market cap, and now of course you will see it even rising even more, getting closer to 2,700 crores. It's got a big share in fragrances, food. It's basically food-related fragrances. It's about a 12% market share. As well, supplies to some of the big food companies, biscuit companies, ice cream companies. So huge, strong clientele, and what a huge interest in its IPO offering itself. But now the premium has started to wear down a bit. It's still higher, 15%, but not as big as the 20% where the stock started its listing. We'll discuss more about SH Kelkar in just a minute. We'll be speaking with the management, but we've been speaking with Manish Prasad of JM Institutional Equities. Manish, what is the sense you're getting in terms of returns from the stock market itself? For the year gone by, the Nifty did nothing, but mid-caps gave us 14% even at an index level, and individual stocks did marvelously well. Would that be the trend?
Choose a great business and you'll get the returns. So I think just focus on bottom up is what we believe in. SH Kelkar was a JM-led transaction. Okay. Great story, great management, 5 competitors globally. In fact, the competitors traded a premium to the FMCG companies, so just a point over here. So you choose great businesses which are chugging along at 20%, 18, 20% growth. ROEs are pretty nice. You don't need to really worry. You need to buy equity and sleep on it rather than the regular trading activity, really. I think one of the guests last week or yesterday spoke on your television. Great time to buy equities over a 3-year horizon. Confusion for traders. I think I completely agree with that. You buy great businesses in India in financial services, consumers, automobiles, two-wheelers, technology. I think enough for grabs out there if you identify the right managements drive businesses, and you possibly have great picks out there.
Okay. In fact, the other recent listing, Interglobe Aviation, should also come up on your screen. It opened with a gain of nearly 3 to 4%, but now it's coming in for some profit booking, so it's dipped below that 1,000 rupee mark. Manish, coming to the pharmaceutical sector, that's a sector where many people have long-term holdings. They're looked upon as a long-term bet, but so many heavyweights have come under the US FDA scanner, which will have long-term ramifications, and therefore, what should an investor in pharmaceutical names like Isan Pharma, Lupin do now?
I think, yes, there is a bit of a trend out there, but it's not really focused on India or anything. I think it's FDA regulations and FDA scanner is there in other countries as well. I think it's happened in China and other areas as well. So really not much to worry, but I think if businesses are established over a 15-20 year period, managements can wade through these issues, and as long as the healthcare scenario is towards cheaper healthcare globally, given the deficits of all countries and the unfunded healthcare requirements. So I think in that sense, maybe you'll have some volatility in between, but again, these are great businesses created by great managements in India. Take it from Dr. Reddy's to Cipla to Sun to Lupin. And I don't think you can really write them off. You can't really think around whether these businesses will be able to survive. Of course they will be able to. I think management think around strategies and vision, how to kind of move around it. Short-term volatility because of a nervous short-term investing, that can create opportunities really, but I don't think there's a longer-term structural issue over here. Again, presidential elections in the US, right? A bit of noise around that. We hear that in IT services, we hear that in pharmaceuticals, generic companies. All that is a part and parcel of the larger macro political mumbo jumbo.
Oh yes, those are big television watching points in India as well. Thank you very much, Manish Prasad, for joining us. Have a great conference out there, and we will touch base with you after the conference to check if any of your views have changed at all. Thank you very much for joining us this morning.
Thank you, Latha.